The market is crashing. Here are my favorite options plays for earnings week. Okay guys, so here we are with another video. So first I want to get this kind of off my chest. It's been an absolute bloodbath out there. I am down so much. I have so much red in my portfolio right now, and I'm pretty sure if you guys have been holding your stocks, if you didn't get a chance to actually get out of the market back in November when Elon Musk was tweeting about could he sell Tesla stock, when we were basically approaching 16,000 in the NASDAQ. If you didn't get out, you're probably suffering with massive losses too. But, you know, in the past, ever since we've had a major dip in the market, there's been a huge recovery and a huge rally. And that's simply the way that, the U.S. economy set up. That's the way the global economy set up. We're basically going to be dealing with peaks of greed, which you could see back in November, where stocks were trading at ridiculous price to earnings ratios, ridiculous price to sales ratios. I mean, for at one point, I believe Rivian, ticker symbol RIVN, was at $170 a share, yet the company barely produced any cars. So, this is how markets are. Even though, stocks over time trade with earnings, you're going to see a lot of emotions into the market. So right now we're going through one of those fearful periods. So what I wanted to do is I wanted to kind of give you guys 3 potential options plays that you can use to profit from this fear and this volatility. Because let's be honest now, the Fed did raise rates back in March. They're planning to raise rates several more times throughout the year. So and they want to cool inflation, but in turn, that's gonna hurt spending. It's gonna make it more expensive to borrow money, and that's really gonna put kind of a ceiling on the economy's potential. That's why you're seeing a lot of people running out of the market. They made a ton of money in 2020. They made a ton of money in 2021. A lot of these people are heading for the exits now. Leaving their money in cash, putting it in bonds or something like that, or even some dividend stocks, trying to generate yield. But we can still profit from these opportunities. Now, me personally, I haven't really closed out any of my positions other than I believe I closed out Marathon at around $25, and I'm planning to buy back lower, and I closed out Beyond Meat. But other than those 2 positions, I've kept all of my stocks, all of the stocks that I've been mentioning on this channel, like Lucid, ChargePoint, Uber. I still hold on to those positions, and that's simply because I'm still bullish about these companies long term. So I just want to kind of get that out of the way, guys, before I give you guys these 3 options plays. So first off, I want to talk a little bit about why these plays are so powerful. So if you guys aren't familiar with what happened with Netflix earlier, I believe Netflix last week, Netflix lost subscribers for the first time in 10 years. The stock fell off a cliff, lost like 25% right after the earnings release. So this is a big earnings week. So let's pull up this earnings calendar, okay? I hope you guys can see this. So as we can see here, pretty big earnings. I'm going to blow this up a little bit so you guys can see it a little bit better. Okay, so this is the earnings week upcoming. So right where I'm kind of targeting, I'm really kind of targeting right in the heart here. So Tuesday, Wednesday, and Thursday. So my first earnings play, okay? This is the play that I'm probably the most confident about, guys. There's several of these stocks on here that I think have the potential to make a big move post earnings, but I'm gonna give you guys the first one. So the first one is Meta. Okay, so why are we talking about Meta? Well, the reason why we're talking about Meta is because, well, basically for several reasons. Number one, okay, last earnings Meta posted, they sold off like crazy. So this stock already has a history of kind of tanking after earnings. Okay, Meta is going to report earnings on Wednesday after the close. So as you can see here, right now it's at $180. I believe a lot of these stocks are going to come right back to where they were right during the beginning of the pandemic. So that means that Meta probably has the opportunity to drop to as low as potentially $140 to $130. Okay, so right now it's at 180. It could sell off, and we could easily see the stock trading right down here near these previous support levels. So there's a bit of profit that you can make. So if you take a look at some of these, what we're going to be doing is we're going to be buying a put. So a put is an options contract that you're going to make money on when the price goes down. So if I showed you guys on the chart here, we're looking at long-term support of about $137. That means that you can obviously purchase some puts that expire in April 29th, or if you wanted to move the strike price out a little bit further, that's okay too. But what I'm basically looking for is I'm kind of looking to follow the smart money. So if I mentioned that I said 139 was a long-term support, we could see what some other people are betting on. So $170 looks like a popular strike. $150 is another popular strike as well. And of course, you have, like I said, 130 or something like that. But this is definitely a lotto ticket, okay? Not exactly sure if Facebook will crash, but one caveat to remember is that Netflix lost a lot of subscribers in Russia, and Facebook and Meta was forced to shut down their Russian operations as well. So they will be reporting a big drop in daily active users because millions and millions of people obviously use Meta Platforms products in Russia. So I think this is a really pretty safe bet. Like I said, if you're conservative, you can just simply buy right near the current stock price, but I'm probably going to be buying probably near the $150 level. That sounds like a good point where I can, put in about $180 as of recording this video, and I have the potential to potentially on a huge drop, double, triple, quadruple, maybe even 10 extra money depending on the strike you get in, guys. So that's my first play, Meta. My second play is Amazon, guys. Okay, why Amazon? Well, simply, this just looks like FANG in general is getting sold off, and Amazon is a stock that really hasn't made a big downward move, okay? We have a couple of reasons. First of all, Jeff Bezos stepped down as CEO, so it's the end of Jeff Bezos' tenure at Amazon. As we can see, ever since Jeff Bezos stepped down, this stock really hasn't made any moves, okay? It seems like there's a lot of resistance on this stock. A lot of people bought in Amazon over the years, got rich with Jeff, so when Jeff jumped ship to focus on his Blue Origin and his space exploration company, a lot of other investors jump ship. Okay, is there growth for Amazon in the future? Absolutely. But once again, guys, this is an options play on earnings. So Amazon is going to report earnings Thursday after the close. We could see once again another potential big tech stock sell off sharply. Remember now, with rising interest rates, inflation is the Fed's trying to get inflation under control. That means less consumer spending. A company like Amazon is going to be directly affected by less consumer spending. They're simply going to be earning less money. So if we take a look here, we hop on to Amazon, Yahoo Finance, head over to Amazon. We take a look at some of these options contracts. We can find similar prices. Once again, I'm just looking to follow the smart money, looking to get in and buy puts where there's looks to be a lot of action. So, Amazon puts are quite expensive, but like I said, we've seen some of these other big tech stocks take a huge move. So there is some profit potential. If we kind of look here, we can see a lot of activity here around the $2,500 strike price. Okay, $2,400. If we keep looking down here, we can also see some puts here as low as $2,000. So if Amazon were to take, let's say Amazon took potentially, maybe it took a sharp move like a 25% haircut, that would put the stock price sitting somewhere around $2,100. So I think any of these lotto tickets are okay. Obviously, I mean, you can pick up an options contract for like $80. If the stock sells off, you're going to do well. If it doesn't, okay, you're out $80, and then obviously you can buy more contracts. But I really do think that Amazon has the potential. It just seems like FANG in general is selling off like crazy. And obviously, I don't want to wait until the news hits to profit. I want to kind of get in on these plays during the beginning of the week. Now, Amazon is trading at a PE ratio of 44. That the mean S&P 500 PE ratio is 24. So according to that number, Amazon stock is a bit overvalued. I wouldn't be surprised to see it drop after earnings on Thursday. And then my last pick is Roku. So the reason why I'm picking Roku as my last options play is simply because Netflix sold off. Okay, Netflix and Roku, they're both streaming stocks. Roku is finally approaching some long-term support, and I do believe that the stock is overvalued, okay? So I love Roku. I think it's a fantastic company, but the problem is that the PE ratio is too high, and we're seeing a huge downswing. Stocks are coming back towards, their normal intrinsic values based on earnings, okay? So right now, Roku is trading at a PE ratio of 56. I expect this to come down a lot more. So my guess is after earnings on Thursday after the close, just like Netflix sold off sharply, we'll probably see Roku retest these $70 levels, which means that you can definitely once again hit up these options chains, buy some put options for a potential movement in the price. We're looking at some popular strikes here. $95 is pretty popular, $92, $86, $80, even $75. So like I said, guys, this is definitely a lotto ticket strategy. These are just my 3 put options plays for this massive earnings week. Just to recap them really quickly for you guys. Number 1, Meta Platforms, ticker symbol FB. Number 2, Amazon, ticker symbol AMZN. And number 3, ticker symbol Roku. Okay, all of these stocks have the potential, I think, to sell off basically just due to kind of the inflationary pressures and just the downswing in the market. It just looks like big tech is selling off, so I'm going to be targeting big tech. Some other potential plays out there that I'm not going to be putting money into, but I'm kind of interested in. I'm also kind of interested in Spotify and also Robinhood as well, but both of these stocks, I believe, Robinhood is trading down, all the way down to $10. I mean, they could possibly trade lower. And Spotify as well is another potential play that I'm not going to actually be putting money into, but I'm going to be watching it closely, guys. So that's it. So really kind of like 5 picks, but I wanted to give you guys 3 hardcore picks that you guys can make money on. It should be an awesome earnings season, a lot of volatility, okay, especially what happened with Netflix. So be careful out there, guys. Once again, never invest money that you can't afford to lose. Me personally, I never go YOLO on some of these plays, although it can pay off handsomely. I'm going to be taking a small portion of my portfolio, less than 5%, throwing into some of these options contracts, seeing what happens. If it pays off, great. If it doesn't, I'm still going to have the majority of my portfolio left. And because, once again, you don't want to necessarily go all in on everything, because I think the name of the game is definitely make gains, but when you lose, take small losses. Don't lose big. So you basically live to trade another day, and so you're not completely out of the markets completely. So that's it, guys. If you guys enjoyed this video, please smash the red subscribe button, smash the like button, subscribe to my channel for more content. I'm going to be posting a lot more content moving forward. There's so much blood right now. I think this is a nice time to kind of take a look at some of the stocks in the market and prepare for kind of moving towards, basically, as early as 2023. We're trying to look forward here and try to pick up a lot of stocks on the dip. So please stay tuned to my video, guys. If you guys are interested in some of the brokers that I use or some of the wealth building resources, be sure to check out those links in the description as well. So that's until next time, guys. Take care.